Welcome back to another episode. Today we're going to take a quick look at SoFi and recent news that the Biden administration just extended the student loan pause through May 1st. So I want to take a quick look at three things. First, how will this affect SoFi and why this affects the company? Two, will this affect the upcoming quarter and in the future? And third, I'll take a quick look at some bullish points for this company. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment where I have free Discord, free newsletter, and some other investing links. So first, let's take a quick look at SoFi. Right now, from its all-time highs, the stock is down about 41%. If we take a quick look at SoFi stock, is sitting at around $14.99, almost 15. It's kind of peaked around that mid-20s, 23, 24 levels. So like I mentioned, student loans is being paused to May 1st. And first, why does this affect SoFi, right? SoFi has student loan refinancing and they have private student loans. So this kind of CARE Act does not work on private loans. It only works on federal loans. So in theory, it should have no effect on SoFi, but it kind of has a trickling effect. For example, if most people who had federal student loans before this kind of pause, they were paying some form of interest. Sometimes SoFi would have some kind of better rates compared to those federal student loans. So people would have an incentive. Hey, even though I have federal loans, maybe if I refinance with SoFi, I'll have better rates. So overall, that increases the revenue for SoFi. The other thing is just originating private student loans from the beginning. Sometimes if you were a parent or somebody trying to take out student loans for your child, or you were a student yourself trying to take out student loan for yourself, sometimes SoFi might have had better rates. But right now, it's obviously better to take out those rates from federal loans instead. And we can see how this has impacted the company. If we take a look at a full year, they have great information in their most recent earnings for 2018, 2019, 2020, and the last 12 trailing months. So we can see in 2018 and 2019, student loans were about student loan originations were about $6.5 billion, right? I think that is insane. And in 2019, they were about 6.7. So both in 2018 and 2019, they were pretty similar to each other. There was a small increase, but then 2020 happened and kind of COVID struck. So it dropped down to about $5 billion then. And if we take a look at the last trailing 12 months, it's down to $3.8 billion. So that's a huge drop right now. And if this extension continues, it's going to give people a reason not to go with SoFi for personal student loans, unless this is the only way they can go. And this is the major reason it's affecting the company. I'm going to talk a little bit later on why I don't think it's that big of a deal. But before we begin, let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. But first, how will this have an impact in the upcoming quarter? No impact for quarter 4 of 2021, which is its upcoming quarter. Main reason is this quarter is gonna end on December, the end of December. So this original student loan pause was going to start in end of January. So for the upcoming quarter, it was never going to have any impact. So guidance was never to reflect that change. So no major change there. The only thing I could see kind of being affected to this is if there were any analysts that were projecting next year's revenue guidance and were kind of already implementing that kind of revenue from more people coming to refinance and more student private loans originations. So I think not from the company sense, but from analyst sense that they might have already kind of guided that kind of strength from that platform. Now we're seeing it's not going to hit Q1 of 2022, and it might not even hit most of Q2 of 2022. But not something I personally would worry about. Now, I do want to say there are maybe not some bright sides to this, but there's a lot of good things happening with SoFi. I do not own this position, but first, even though it's kind of seen that weakness in the lending platform from student loans, it is seeing strong growth in all the other loans, right? For example, personal loans. If we take a look back at this chart, the second one is personal loans. Personal loans is increasing if we take a look at last trailing 12 months, and so is home loans originations. So overall, the other lending products for SoFi are increasing, which is great news. And this is also one that has positive contribution profit for the company. This is also a company growing insane. We can take a look in most recent quarter. It grew 96% year over year in members. Their products increased 108% year over year. Galileo accounts grew 80% year over year. Their overall lending products continue to grow. And they also have 5 quarters of positive adjusted EBITDA metrics, right? And this is without that student lending platform kind of seeing that growth. So once that comes into place, this company will see even bigger growth, in my opinion, in revenue, in quarterly adjusted EBITDA. I keep saying EBITDA. So in the bright side, it might not look that bad, but once things get turned back on, I do believe it's going to be a nice tailwind for this company. So I hope you guys enjoyed today's episode. Take care, have a good night, and see you next time.